Hello, Travis with Tetelestai, Bookkeeping and Tax, talking today about how to properly record escrow payments. Let's take a look. So I'm using this Stample Company test drive account, and you can use this as well. You just Google QuickBooks Online test drive account and choose the advanced option. So let's start with the bank feed, and let's say that this $1,200 payment is our payment to the mortgage company. Let's just call this mortgage bank. And if we were looking at our statement, we would see various components of that payment. So the first thing we'd see is the principal. So let's say the loan, let's say that's the name for the loan in our chart of accounts. And just to make it simple for illustration purposes, let's say 400 of it is going to principal. So this is a liability, which means it normally holds a credit balance. We are going to debit the liability, reducing it by $400. And if you're using classes, let's say this is for this property here. And then the next thing you're going to see is interest. And this test account doesn't always work with naming the accounts so well, but we get the idea. It's an interest expense. Interest paid is the detail type. And let's say this is $400 as well. This is going to Main Street. We're going to add a line. And here is the part that a lot of people aren't tracking, but should. Escrow. It's an other current asset account. So the reason it's an asset for you, the borrower, is this is money that you've paid to the title, the escrow company, and they haven't yet paid it out to the county for property taxes or the insurance company for the property insurance. So it's an asset for you. On their books, it's a liability. And let's just say that it's just evenly split. So it's another $400. And of course, you could track the customer as well. Okay, so now we have this $1,200 payment. It's to the lender. It's split up between the principal, the interest, and escrow. And you can always look there for a check. So we'll say split and add. Now let's check it out on our profit and loss. Make sure it's booked correctly. Yep. This is something from later. Let me go ahead and delete that for now. We'll get to that. Okay, so we have our interest, and let's look at our balance sheet. Let's see if it's accurately reflected there. So we see our escrow account is increased by $400. Great. And our loan payable is now $3,600. Is that correct? Well, let's take a look. Yes, it was decreased by $400, which is exactly what we want. Perfect. Okay, so that did what we wanted to do. Now, let's look at an example of when you get your mortgage statement and it shows that the escrow company paid property tax or paid insurance. So let's go ahead and enter an expense for that. You could also use a journal entry. Different ways you can get there. We'll go through this way this time. Okay, so let's say this is property tax. So paying to the county. It's coming from the escrow account. And this is going to be property tax. And let's say it's just the $400 that we already have in there. Save and close. Okay. And let's take a look. Let's refresh our P&L. Make sure that booked properly. And there we go. Property tax is paid $400. And let's look at our balance sheet and make sure that was booked properly. Should reduce our escrow account down to 0. So that's correct. So that works just as planned. Now, let's look at one other thing we can do in the bank feed, or rather in rules. Let's, we usually like to create rules from the feed, but in this case, let's just go ahead and create it here. So let's just call this 123 Main Street mortgage payment. And let's change this to amount. You could also have description, but I don't know what that is. So let's say that is always going to be $1,200. So the total loan payment is always going to be $1,200. Great. Now we want to, let's go ahead and say first category is going to be that principal part. And we can go ahead and put the payee in here. That's what we call it, mortgage bank. Okay, and so we're going to just make this by amount. So let's say principal is 400, and we'll go ahead and add the class because we're only applying it to this loan. If we had a separate bank account for this property, we could just use that or designate that. And then our second category is going to be our interest. That's interest paid, same class. And then our third category is going to be escrow. Okay. And what happened here? Okay, principal, interest. Let's just make this equal. Why does it not give me an amount for the third split? Interesting. Okay, I guess that's a bug. Oh, now it popped in. Yeah, that's a bug. And also this changing the dollar amount's a bug. All right, but you get the idea. We've got the Main Street, and we'll turn auto add off for now. What that will do, we can test it too. Let's go ahead and save it. Each split needs a category. Oh, it's not. I added this, but because there's that bug, but now there's nothing there. And I don't see how I can delete this split. All right, well, let's just add something else real quick. Totally not applicable, but sometimes you gotta make do with these test accounts. Okay, let's go back to the bank feed just to show you how this will work. And I'm going to undo this transaction that we added. And now we can see there's a rule. So we can add You can see the rule is applied there. So we can add using that rule. And let's take a look at it and see what it did. You can already see that it's split. Now I know this isn't exactly correct because there are restrictions with the rule, but you see it did its job. And let's take a look at the profit and loss. See how that flowed through. Yep, that's correct. And the balance sheet, refresh that. Yep, escrow. I think we had something else going on there. Escrow. Yeah, we had that payment zeroing it out, so that makes sense. And our liabilities decreased again. So that's how to record mortgage payments, including principal, interest, and escrow. And that will give you an accurate accounting. Monthly, should reconcile monthly to your statement. And at the end of the year, of course, when you're getting ready to file taxes, you can have a good idea of how you reduced your loan balance, your principal, how much interest you paid, and how much you paid for taxes and insurance, and what your escrow balance is. Hope that helps. If you have any questions, comments, concerns, conundrums, please post in the comments and I'd be happy to answer. Thanks.